to just kind of share with you. So the markets opened, and immediately on the gap up on the SPY, the gap on the gap up, you literally just start headed down this way. You have perfect alignment of the 20, the 10, the 5, and the 3. Everything is coming down, coming down, coming down. So, and it's a Monday as well. So you look at this and see, is it possible that this is a reversal? Is this what you'd be looking for? I guess that's the first question. Is that what you're looking for at 10 o'clock? The reversal to the upside? Yes or no? Come on, don't be shy. Don't be shy. Just answer. Doesn't matter if you're all wrong. And guess what? You're all right. Yeah, you're looking for the move to the upside, right? You're looking for it. But does it line up? Did anybody get caught going long here? Come on, admit it. There's the reversal candle, confirmation candle. Anybody get caught right here going long? That's what you're supposed to do. You're supposed to trade in the direction of the other direction of the shift, coming up on the time of day zone. Sort of got some bluish something over here, green, whatever. Nobody took this trade to the upside, or you just don't want to admit it. Well, if you didn't, that's excellent, because that means you were following rules. The RSI didn't budge, that's for sure. You never got confirmation on the shift dots. You never got a single green tick during that period of time. Momentum is just falling and whatever. Cycle oscillator is just, mulling its way on the bottom, splashing around in a puddle over here. This is literally just splashing a puddle. So you got nothing here, 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 you got nothing here. And look at the 20. Does this look like a shift is in the making when you look at the 20? No, right? But what happens, and here's something that's just interesting, right? When this moved up like this, did the 10-period moving average flatten? Remember what I said, that when moving averages are coming down like this, it's very difficult for price to all of a sudden go whoop like this. Very difficult. Usually that's on a piece of news, a spike like that. My rule is what? Not a rule, I'm sorry. My observation is that typically the moving average that you're tracking, the 20, the 10, usually will flatten out a little bit. So once it does, price then has an opportunity to poke its head up here a little bit and can finally sit here and then move up. Do you guys remember this conversation that I've had with you millions of times? Moving averages tend to flatten when price, just because price is slowing down. And as price slows down, price action slows down. Think about what a moving average is. It's the average price over 20 candles. So if the average price is lower, lower, and lower, and lower, and lower, even if you get a couple of moves up, the average, which is what this ribbon is based off of, ain't gonna budge. But if the average over, let's say, right here, the average price between this candle, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, the average price of these 20 candles is significantly higher than the average price of, say, these 20, or of 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 these 20, then that's when the moving average starts to flatten out. Got it? Does that make sense? So when you see the flattening of the moving average, any moving average, it just means that the average price over that many bars or handles is changing. So there are some that will say that the moving average is a lagging indicator, and I've said it too. But in certain aspects of technical analysis, in certain conditions, It is an incredible indicator of what's happening in the market, what's happening to price. Not so lagging, is it? The fact that price right here, started to flatten out a little bit for the first time all day means that the average price over, because this is a 20-period moving average, over 20 handles is actually shifting. And when that happens and price comes up to it, there's a pretty good chance that it will pop above it. Not a good chance it'll do that here or here, but there is a good chance here. So if what I just said makes sense to you, then if you see the 20 coming down like that, I would suggest you insert the 10. I love that. This white dashed line is the 10. So I put it on mine. Look at it. It gets a little jig, but not much. Little jig, not much. Look at this, right to here. Freaking train tracks for the most part. But then on this candle, right? Not this one. Look, not that candle, not that candle, not that candle. Really not this monster candle either. But on this candle, the moving average not only flattens, but jerks up. Everybody see that? And this flattens out. So cool. Yeah, I know Cake likes, the Cake uses the 20 quite a bit. And for a conservative trader or people who trade scared, not that he does, but he is communicating this to the room. It can be a good rule to follow. I watch it, I have the 20, but that doesn't mean, just because price is below it does not mean I won't trade up. Or if price is above it, that I won't trade down. But I'm aware of it. I'm aware of the trajectory. I'm aware of its relationship to price and other moving averages. Flatten. Now look at this. What did I say? Usually before price really reverses, you get a candle that really drops off. See this one right here? And when that does, the fast moving average drops further than the rest. See it? Thereby forming a triangle. So look at this for a minute. So I'm going to just put, I'm going to put the 20, I'll put the 10. There's the 3 and the 10. So what I normally do is on the 3, I have it in blue. On the 10, I have it in white. And then on the 10, I use the dotted line. And on the regular line there. All right, there we go. 3-minute chart. I'll do 2 minutes just to make it simple. See it here? See the 10 coming down, coming down, coming down, coming down, coming down. Oop, flatten. And up it goes, right? But before it does that, you see that candle that came down even harder? You see this is the 3-period moving average, and this is the 10. You see it? This isn't really a triangle, but pretty cool. When you look at what happens, the 3 stretches down, this flattens out, and it forms this little area right here. Then you wait for the pullback. There it is. And then here's your trade. Boom. This is the trade right here. Anyway, I wanted you to see it. So when you look at, it happened again. Look at this happen. Look at that happens again. Look at this. Look at this. Look at this. Cool, huh? Up. Look at this huge one up here. Huge one here. This one here. So that's why it's nice to have sort of a fast and a slow. Obviously I have the 5 in between, and I got the 20 above it. That's why I have all 3 moving averages. So you didn't get head faked here. That's good, right? So now you're waiting, now you're waiting, now you're waiting, now you're waiting, now you're waiting. Come on. Oh, so look at this. Reversal candle. Yes. Confirmation candle. No. You have a no trade. Then you get this candle. Okay. So you could say reversal, confirmation. They don't have to be right after each other. I wouldn't wait 4 candles, but you could have one in between here if you wanted. Fine. Reversal. You got to have a moving average cross, and you get one. So look, right there, your price action time of day zone lines up. Does everybody get that so far? Yeah. Boo. I'll get to your question in a second. Everybody see here? So you're getting ready for a shift, aren't you? 10:40 time of day zone. You've been coming down all morning. This could be it. Price action for sure. You got reversal candle, you got confirmation candle, and you got the moving average cross. 1, 2, 3, all happened right here. Great. Now you look at some other conditions. Well, is this going to flatten or what? Yes, it does. Okay, boom, boom, boom. Okay, cool. Let's see. So what I'm waiting for, I look here and I go, well, I don't have it yet. Ooh, I got it here. Yeah, I got to kind of wait a little bit. So the two things I'm waiting for, I really want to see the moving averages, give way, which they do. The 10 flattens and goes up. These cross and go up. That's great. Not only that, the 3 and the 5, another reason why I have the 10, the 3 and the 5 did what? In relation to the 10, what did the 3 and the 5 do? Yeah, they crossed above. So what I love to see is when I get a moving average cross of the 3 and the 5 like this, and now they're like this, move together, I want to see them cross over as a ribbon over the 10. That's an incredible, for me, a great shift indicator. In fact, I'm looking at potentially doing something with that. I've been tracking this particular ribbon for a while. It can go back and forth, but I like it. I like it a lot. It's basically the 3-5 ribbon that crosses over the 10. Or you could set it to cross over the 20, or you could set it to cross over the 8. Like I would give you the ability to change these numbers if you wanted to. It's basically a moving average cross that crosses over another moving average on the same time frame. Anyway, you can see that it did that right here. So I'm just waiting, right? Just kind of waiting for everything to line up. And sure enough, you get the pullback that you want, and then it starts to head back up, and then you get the RSI going green, blue dots, trajectory. That's the trade. It doesn't look like very long here, but this is $1. This is a 9 to 10 point move on SPX. This right here. Would you wait for a retest of the 10? Not necessarily the 10. I'm just waiting for a pullback. So if you look, we do not trade after the pullback. What do you mean by that? Of course we do. That's the whole point. Unless I'm not understanding your question, Pearl. Here's the pullback, right? Beautiful pullback. See it? See price going up, 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 up. Oh yeah, that is the pullback. That is your entry right there. Everything's in alignment, and you got a beautiful pullback off of your initial shift information. Does that make sense, Pearl? Or are you confused about something? Oh, or do we not trade after? Oh, I misread your you wrote it like Yoda, so I misread it. Do we not trade after the pullback? Yes, we do. You're fine. You're fine. You're fine. So yeah, we do trade it after the pullback right there. Boom, boom, beautiful. What 900 contracts you reach? Exactly. Okay, so that everyone's clear about this particular trade. So this worked out nice. It was effective.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.